Hey guys, welcome back to the channel and thanks so much for tuning in. In this video, I'm going to be setting out the 5 main asset classes, exactly what they all mean and how they stack up as investment options so that you can decide which ones are right for you. I'll also tell you why it's important to invest in more than just one of these asset classes so that you can be in a position to benefit from whatever the market throws your way. If that sounds good to you, let me know by hitting the like button, and if you want to see more videos on all things related to personal finance, investing and entrepreneurship, go ahead and subscribe to the channel and click the notification bell, and YouTube's then going to notify you as and when new videos are released. Also, feel free to say hello down in the comments, and with that, let's get into it. So the first asset class we need to talk about is cash. This includes any money that you've got in your bank or savings account, as well as the cold hard cash that you've got sitting in your pocket or stuffed inside of your mattress. Whatever the case, everybody loves cash. But as an investment option, it's usually the lowest risk and it therefore offers the lowest rate of return. The investments that you can make with cash as an individual investor tend to be limited to things like savings accounts and fixed term deposits. And whilst it's true that you'll be offered a slightly better interest rate if you lock your money into a fixed term deposit, the banks aren't exactly offering rates that are going to make you rich anytime soon. So this option is usually best for people who are really quite risk averse, or for people who are looking to park their money somewhere in between making longer term decisions. And if that's you, make sure you have a look around at the different options that are available rather than just going with your existing bank. Whilst the rates on offer will be fairly similar across the board, they will differ slightly because these banks are all in competition with one another for your business. And some of them will even offer you a cash bonus for switching your account to them. And that's basically free money. Also, it's a good idea to have an emergency fund saved up in cash with about 6 months worth of your overall expenses, so that you've got a safety net to fall into should disaster strike and you temporarily lose your income. Whatever your reason for holding cash, shopping around for the best available rates is going to help you to ensure that you get the biggest bang for your buck. The next asset class is bonds, or fixed income securities. For those who don't know, bonds are basically loans which are issued to investors by companies and governments as a way for them to raise money. Bonds provide a regular flow of income to investors over a set period of time, together with a promise to repay the investor's capital to them at a set date in the future. Now, there are different types of bond that issue varying levels of risk and reward. For example, bonds that are issued by companies might not be as safe as bonds that are issued or guaranteed by certain governments. This means that whilst you might be offered a higher rate of return for lending money to a company, the risk of them paying that money out to you might be slightly higher. Overall though, bonds are typically seen as a lower risk investment, and in particular those ones that are issued by governments. Interesting fact, the US government has never once defaulted or missed a payment on a debt. That doesn't necessarily mean they never will, but it's a pretty reassuring track record if you're still on the fence about bonds. One of the easiest ways for you to invest in bonds would be through a bond index fund, or ETF. This will give you access to a large pool of bonds in one simple diversified investment. I've made another video on index funds and ETFs, which I'll link down in the description, so be sure to check that out if you want to learn more about index funds and how to choose one. The next, and probably the most popular asset class, is equity, which is better known as stocks or shares. Stocks represent a portion of ownership in a company and entitle you as the holder to a percentage of that company's assets and profits. For example, if Tesla had only 100,000 shares in issue and you own 50,000 of them, well, that would make you a 50% owner of Tesla, and you'd therefore be entitled to half of its assets and profits. Now, depending on the company's objectives, those profits could either be paid out to you in the form of dividends, in which case you'd be receiving income from your stocks, or the company could choose to reinvest its profits in an effort to grow and increase the share price, and in that case, you'd benefit from the increased value of your stock. Now, of course, neither of these outcomes is ever guaranteed, and there is always a risk that the company might not perform well, which could cause its share price to decline in value. And for that reason, stocks are generally seen as a higher risk investment. With that said though, over time, the stock market as a whole has historically risen in value, despite there being a few dips along the way. For that reason, investing money into a well-diversified portfolio of stocks is the best way to reduce risk and be in a position to benefit from the potential for longer term growth. As I mentioned earlier when we spoke about bonds, index funds and ETFs are also a great way to invest in stocks. So again, be sure to check out my video on this, which I'll put a link to down in the description. Okay, so the next asset class we're going to talk about is real estate. The most popular methods of investing in real estate are usually either through purchasing a property with a view to making some improvements to it and selling it on for a profit, or alternatively purchasing a property to then rent out and benefit from the income that that generates. One of the most attractive aspects of investing in property is the ability to use leverage, which in this case means borrowing money in the form of a mortgage to pay for the property. Now, there are of course risks to using leverage. However, when it's used properly, it can be a major benefit to investors by increasing the potential returns on your investment. Because there's so much to be said about leverage, I'm not going to go into it any further now, but I will create another video going into leverage in slightly more detail. So make sure you subscribe to the channel if that's something that you'd be interested in seeing. Now, in terms of risks, besides the obvious risk of property prices falling in value, there is another drawback to investing in physical real estate, which is that it's not very liquid. And that means that it can often take months to sell a property and turn your investment into cash. This isn't the case for most stocks or bonds, which can usually be traded for cash within just a couple of seconds, and are therefore a much more liquid option. With real estate, there are also investments known as real estate investment trusts, which are companies that own, operate, or finance income-producing real estate. These companies offer investors the opportunity to benefit from the income produced by the underlying real estate investments, but without the investor having to go out and physically buy a property themselves. Most real estate investment trusts issue stocks which trade on the major stock exchanges, just like other public companies, and they can therefore be a really great way of getting into real estate investing without having the big upfront costs such as a mortgage deposit. And now the last of the major asset classes, which is commodities. Commodities are the basic goods that are used in international trade, and they traditionally include the natural resources and agricultural products that we're all familiar with. These are things like beef, wheat, gold, and oil, to name just a few. Commodities are usually traded in bulk on a futures market, where investors will buy and sell contracts that give the holder of the contract the right or the obligation to buy or sell a set amount of an underlying commodity at a set price at a predetermined date in the future. Given the more complex nature of trading in futures, this is something that most individual investors do tend to steer away from. However, commodities do offer a really good way of balancing risk in a portfolio that has a large allocation in stocks. That's because stocks and commodities tend to act in opposite directions during different market cycles. So for example, when the stock market isn't doing so well, commodities tend to increase in value and vice versa. There are a number of mutual funds that invest in commodities, and for most investors, this is probably the best way to go to get exposure to commodities without taking on the additional risks of trading in futures. Now, as I mentioned at the start of the video, it's always a good idea to include more than one of these types of assets in your portfolio, and here's why. As we all know, the only certainty when it comes to investing is that you can't be certain of anything, and therefore diversifying your investments across a number of asset classes will put you in the best position to be able to benefit from the different types of market environment. Putting your entire investment portfolio into just one asset class is a really high risk strategy. And that's because if that asset class doesn't perform well, it will have a massive impact on the overall value of your portfolio. However, by spreading out your investments across a number of different asset classes that work in opposite directions, it has the effect of smoothing out those big swings in value, and therefore it makes for far more stable and consistent returns. So there you have it. Once again, the 5 main asset classes: cash, stocks, bonds, real estate, and commodities. I really hope you found this video useful, and if you've made it to the end, go ahead and say hello down in the comments and let me know what type of asset class you like the most. Also, don't forget to give the video a thumbs up. It only takes a couple of seconds to do, but it really helps me out and it helps the channel to grow and reach more people too. I post a brand new video here on the channel every single week, so if you want to be among the first to be notified when a new video drops, go ahead and hit the subscribe button and the notification bell, and YouTube is then going to notify you as and when new videos are released. Thanks so much for watching, have an amazing day, and I'll see you back here next time.